Today, we will work on a trading and order management system that hardly anyone teaches, or you can find it on the internet. I call the system as pyramid order management. It is a simple system based on managing your risk on divided portions. We have so much to learn and discuss. If you're ready, let's start. As you already remember, we started our new series, One Strategy for Life. Keep focusing on a single strategy and evolve it. From now on, I'll try to work on risk and order management with different techniques. Okay, let's imagine that we found ourselves a clear target and a possible entry area. Everything is great at this point. However, what is our biggest struggle? Where to enter? I get this question every single day. Which imbalance or liquidity sweep shall I use? My friend, no one knows the answer for 100%. This is why we use risk management. Let's imagine that we have an imbalance here and another imbalance right below it. Also, this is another liquidity point, right? Who in the world can say for 100% this is not another liquidity point? And maybe we have this much deeper imbalance to pull back to. So many possible entry areas, so many decisions to make. We will either miss the trade or stop that with a single trade. How can we overcome this problem? We will use a technique called pyramid order system, a very similar yo-yo technique from my masterclass. So instead of building a single position, we will build multiple positions based on every single entry point. Let's continue to learn. First of all, how much money should we risk? Can we risk 1 hour for each setup? No, not at all. Our risk exposure would be extremely high, facing a 3% loss on the account for the worst case, also paying so much fees. This is not viable. Instead, we will slowly increase our risk, and our total risk will be 1 hour or at maximum 1.5 hour, depends on your decision. This way is much more useful and manageable in the perspective of risk management. So basically, we will use possible multiple entry point areas and we will slowly increase our risk of each position, totaling 1 hour or 1 hour, depending on your preference. You may ask this question: why are we increasing our risk, not using bigger risks first? Basically, we risk more of our money at cheaper discount prices. We are getting a better deal for our purchase, as simple as it gets. By the way, you can use any combination that you can imagine. You can create 5 orders or 10 orders. You can start from 0.1 hour. It does not matter. What matters is the total risk shall not be bigger than 1.5 hour at any given point. You would never want to lose huge portions on your main capital. How does this system actually work? First of all, you have to place all orders very close to each other. A stop in one order should trigger the next order. Basically, your first order triggers. Best case, it will work and you'll end up with profit. Worst case, you'll be stopped out and your second order will be triggered. Best case is this: your second order will cover the loss of 0.2 hour from the first order and move to the profit. Worst case is you'll be stopped and your third order triggers. It will continue like this forever, depends on the number of orders you have. Let's work on a real example now. If you follow my Twitter, I traded like crazy in the recent weeks. I didn't even have time to make YouTube videos because we entered a bull season with cryptos. Let's talk about this 4-hour chart of Ethereum. You can apply this strategy to any asset with any time frames. It does not matter. Day trading or swing trading, the logic is same. As you can see, these equal laws are swept by this crazy swing failure pattern and rejected very strongly. Plus, price tapped this imbalance, and it also cleared this parabolic liquidity right here. We got all the fuel needed right now. But where is the price heading? We had this great current year high, which depends on 2024. And the previous week high at the top, and above them, we had this previous month high from 2023. So all these institutional levels are waiting for us. If you carefully look at it, this is actually a range. And below, we had this deviation and manipulation area. Let's drop to the 2-hour chart and get a close look here. Right here, we had this small power of 3 structure, which created itself inner fuel to move up with this powerful displacement. And we took our first entry right here at this point. Up until now, everything is clear and simple. However, I can hear your questions already. What if the price sweeps this liquidity as well? Yes, it can. There is no one single human being in the world can guarantee that it will not sweep that. Then let's build our second position to that liquidity. Notice that I am connecting my new entry to first order's stop loss. So they trigger in sequence. Let's move on. I can hear your second question. What if the price sweep this liquidity as well and then move on? Also, this imbalance is not fully filled. As you can see, maybe the price will sweep this deep liquidity and fully fill the imbalance and then go up. Possibly, who knows? Then we placed our third position in this area. Remember, you are not an oracle or fortune teller. None of us knows what is gonna happen next. We can only control our risk and make educated decisions and use risk management methods. That's it. We built all of our orders. Now let's evaluate what may happen. First of all, our risks. We gradually increased our risk when we were setting our positions. Why? Because we want to risk more money at cheaper prices. We also want to cover our losses much quicker from the earlier positions. But how? Imagine that my first position stopped out here. I lost 0.2 R on my account. And my second order is triggered. If the price only moves this much, I already covered that 0.2 R loss from the first trade. The rest of the movement is pure profit on my side. Let's keep discussing the worst case situations. My second position is also stopped out, and my third order triggered here. How do I become break-even? What is my loss? 0.2 R plus 0.3 R, total of 0.5 R, which is equal to my risk in third position. So if the price moves this much, I am break-even already. Rest of the move is profit. Do you understand the logic here? The power of risk management and mathematics? However, nothing is perfect. The positive sides of pyramid order system are these. You'll no longer fear entries. You will feel secure and easy when you build your trades. Furthermore, you'll never miss any entry because your orders are waiting for almost all possible entry areas. You will never ask me again which imbalance or liquidity to choose because you have orders everywhere. What are the negatives? Obviously, you will make less profit than regular single setups because you are not risking one full hour at once. All risk divided into pieces, which will bring you divided profits. Secondly, management. So many orders can be troublesome in the beginning. It has a learning curve. I hope this lesson improves you, opens you new doors on trading and risk management. Take care, my friends, and have a great day. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You'll learn liquidity, inefficiencies, and structure mastery deeply. And we will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with magic alignment system. Finally, you'll discover a strategy called YOYO strategy, which will open new doors for you about taking and managing trades. If you are interested, you can find links on my website on the description. Take care, friends, manage your risks, and stay safe.